What's happening, everybody? It's your boy, Chicago Sean McLaughlin, and Steve Strazza. Steve, what's happening, buddy?
How's it going, man?
Man, I'm
Glad
just,
to
uh,
have
I'm
you
just
back.
happy to be. I'm torn. I'm happy to be back from vacation. It's good to be back in the swing of things, back in the normal routine. But I missed Hawaii, man. I was in Hawaii for 2 weeks, and I miss it already.
It sounds great, but I missed you, so works for me.
Flattery will get you everywhere, Steve Strazza.
What do we
Well,
got?
hey, let's talk about the trade that we put on today. You and me and JC were all brainstorming this morning about some good trades to put on, and maybe let's talk about the trades that we didn't put on because we were kicking around all these great ideas and we are like, look at that chart, this looks great, this thing's ready to go, and like every single one of them, we're like, oh well, there's earnings next week or there's earnings tomorrow or like we can't do that now. Let's wait.
It's that time
It's
of
that
year.
time of the month
Yeah,
or time of the year, yeah.
quarter.
But then we did stumble across one, and this is, by the way, a company that I had never heard of before. So full honesty, but they're all just letters and numbers, right? But Tech Resources is the name that you brought up, and you said it's a Canadian company based out of Vancouver. What do you know about this company?
It's just a mineral and mining conglomerate. It's one of the larger materials companies, believe it or not. Um, Coal, copper, zinc, all fun stuff like that.
Wow.
Tech resources.
So it's a
TEC.
company I'd never heard of. And in fact, when you guys first brought it up, and I'm like looking through the options chains and seeing if there's any liquidity, before I pulled it up, my thought was, oh, this thing's going to have no volume. I mean, there's going to be no options in this thing. And sure enough, I mean, it has a pretty active options chain. Plenty of liquidity, plenty of open interest. The bid ask spreads were pretty tight. And you noticed something in the November options. Tell me what you saw.
Yeah, as we were looking at it, it popped up on my radar. So this name will be on Follow the Flow this weekend because there was unusual options activity in the November 30 strike calls.
And that unusual options activity happened today, if I'm not mistaken, right? So this was after they announced their earnings. They announced their earnings this morning, right? Or
Usually you'll
no,
see like unusual call volume come into the name because somebody wants to play earnings, but I think it's really cool that whoever was doing this waited for earnings to pass, which we like a lot, and then made their splash. So
awesome, awesome. So as my friend Lee Corso from College Game Day likes to say, somebody knows something. And so, hey, we don't know what that something is, but we're willing to play along. I mean, look, let's take a look at this chart here. I mean, just the chart alone, we love, right? I mean, it's a stock that's breaking out over multi-year highs. It's holding over some key support that goes back to 2018. I mean, look, on just looking at the chart alone, it's a good looking setup. Wouldn't you agree?
it's a great looking base, just resolved higher, and it's a really nice way to play commodities. This is a stock, but it's going to give you a lot of exposure to the commodities market. So
Right. So we were kicking around this morning. You had highlighted the unusual options activity in November, and so that piqued our interest. And we looked at that, and adding that to the fact that we love this chart and we love it as more of a long-term setup. I didn't want to play the action in the November options because that only gives us 23 days of expiration. I feel like this could really make a run towards that Fibonacci extension up north of $38 a share, but it's not going to happen tomorrow. It's going to probably take a few weeks or a few months. So I went out as far as I could without going too far. And I went out to May options and I chose the May 31st strike, or sorry, the May 31 strike. This is the May monthly options that expire on May 20th. I'd got the 31 strike calls. Now, normally, Strazzy, you know this. Normally, when I'm buying long calls, I like to buy the calls that correspond with the 25 delta
yes.
strike because that's just kind of the sweet spot as far as bang for the buck as well as affordability. But in this case, the 25 delta options were right at our uh, price target, our long-term price target of $38 a share. So I was like,
Too high.
yeah, I don't like that, but I did like that in the May 31 calls. There was already a lot of open interest, so that tells me that maybe somebody knows something. Who knows? I don't care. But there was good open interest, and even more importantly, that strike, the bid ask spread in those options was among the tightest amongst all the available strikes. So, just from a liquidity point of view, I liked that better. I paid a higher delta than I usually like to do. But the calls only cost me around 290 a contract. I bought a bunch, but my average price is around 290. So, look, the other thing we should point out we should have mentioned earlier is that another reason why we like this setup is not only because we like the potential for it to go higher, but we also have a very clearly defined risk management level very close by. The stock right now, I mean, as we're talking, it's trading around $28.17. And looking at the chart, basically, if this stock can't hold above 27 bucks, which is only $1.18 away, if it can't hold above 27, then at least in the short term, our thesis is busted, right? I mean, there's a breakaway gap that happened about 2 weeks ago, 3 weeks ago, that happened through 27. So if that comes back and they fill that gap, that's bad news if you're bullish, right?
No, and we love setups like this. Like you said, the breakaway gap really speaks to the market memory that's sitting at that 27 level. If prices are going to fail here, they're going to, collapse back below 27. We want nothing to do with it, but we love knowing where we're wrong. It really helps us manage the trades.
Right. And I get this question. I'm sorry?
Where are you taking profits on this one?
Oh, good question. So I'm going to do what I always do with long calls, and that is I'm going to sell half the position when I've got a double, if I get a double. And I mean a double in the price I paid in the options, not a double in the stock. A double in the stock would be great, but I paid $290 for these calls. So if I get an opportunity to sell half of my position at $580, which is double what I paid, I always do that with long calls because that takes my risk off the table, my original risk capital, and now I basically have half a position for free. Stock could go to zero tomorrow after I do that, and I walk away without a loss. I lost my open profit, and that sucks, but at least I won't have a loss. So my first thing,
free ride. I mean,
that's right. I love the free ride. Hashtag free ride, as I like to say. Now, as far as any additional profit target, I don't have. Like, I know you guys like to talk about price targets, and we have 38 as a price target for TECK over the long term. But, especially once I got a free ride on an option, I'm willing to let it ride because I have that confidence of knowing I can't turn this trade into a loser. So I'm going to hold it. And if it goes up to 38, I'm going to keep holding. I might regret that I didn't take the profit when it hits there, but who knows? It could hit 38 and keep on going, Steve, and we'll never know. We'll never have a chance to earn that profit unless we stay with it. So I don't have a profit target per se, Steve, but I I'll take half off like I always do. But more importantly, and I get this question all the time about our stop losses. So we talked about 27 as being the stop loss level.
Yep.
I don't care if 27 is hit and broken intraday, right? I'm not micromanaging these positions when they're on. If the stock trades down intraday to say like 26 and 3/4 or 26 and a half, like I'm not like sitting by the trigger ready to fire out of it. I want to see how the stock closes. This is a defined risk trade, right? I mean, the only amount of money we could lose on this trade is the premium we paid, right? That's the most we could lose. And I always size my position knowing that there's a full understanding that I could potentially lose 100% of the capital I invested. And so I size my position such that if that happens, it's okay. It's okay. It's perfectly within my comfort level of how much money I'm willing to lose. So with that as a backdrop, if the stock's trading below my risk management level intraday, I'm not worried about it. I'm not sweating about it. I've already kind of mentally accepted the potential of a full loss. But I want to see where it closes. Because there's a good chance the stock will bounce back above our level and close at 27 and a half. I mean, we've seen it over and over again. I mean, even today's intraday price action didn't trade below 27, but coming out of earnings, I mean, it sold off pretty hard first 30 minutes of the day, and then it's rallied higher and it's up at the upper end of the range right now. So I'm all about the closing price. As long as we stay closing above 27, we'll keep riding this position. If we do see a close below 27, that's our signal to get out. We may get whipsawed, but that's okay. That's the cost of risk management.
You're such a technician on the inside. Charlie Dow, closing prices matter most. Sean knows.
Oh yeah, only price pays, as our friend Brian Shannon likes to say.
That-
All
And
right,
I love
Steve.
what you said about taking half off because it gives you the flexibility to let price action kind of dictate how you want to manage the other half of your trade. It's lovely when that happens.
Absolutely, absolutely. Well, Steve, that's all I got. You got any parting shots on tech resources?
No, we're going to cover it again and follow the flow this weekend if you want more.
All right, everybody. That's our trade idea for the week. Thanks for tuning in. We'll be back with you next Wednesday. As a guy who just returned from Hawaii, aloha. Take care.